As we enter a whole new week in trade, let's take a look at the global cues from last week, as well as how the futures and Asia are performing right now. Now, stocks fell on Friday to close out a tough week. It was a difficult day. A $1.9 trillion US stimulus package failed to excite markets, and in fact, there was a sell-off after that, despite the fact that we had earnings from US banks as well. The Dow closed 177 points lower, the S&P dipped 0.7%, the Nasdaq dipped 0.9%. So all three benchmarks had a tough day and a week in trade. The Dow and Nasdaq posted weekly declines of 0.9 and 1.5%, snapping a 4-week winning streak. The S&P lost 1.5% as well over the last week. Dow Futures this morning are still down around 40-50 points. S&P and Nasdaq futures are little changed, and markets in the US are closed today for a holiday, so we won't be having any cues from the live market, but we'll see how the futures are moving. Now, Asia this morning is taking it on the chin. It's been a very tough day in trade for them. Of course, the major macroeconomic indicator to keep an eye out for today is China's Q4 GDP data, which has come in quite solid. However, consumer spending in China has dropped in the quarter gone by, and that's, of course, raising a lot of red flags in the region. On the back of that, the Nikkei has fallen 1.5% in early trade. The Topix is down nearly a whole percent, 0.86%. South Korea's Kospi, one of the best performing indices, is down over 1%, 1.3% losses seen there. And the S&P ASX 200 in Australia is down around 0.75%. So Asian markets looking a bit weak. Europe closed in the negative territory on Friday. New lockdown measures and uncertainty revolving around what's happening in China with the resurgence is also hurting sentiment. The pan-euro fell 1% down, lagged by a weekly loss of 0.8%. Basic resources shed 3.1%, and all sectors were negative in Europe except for healthcare, which was up 0.7%. We then have two commodities, oil and gold. Oil prices also fell 2% on Friday because China is having a huge resurgence in COVID cases, and they are the largest importers of oil in the world. Chinese cities are back in lockdown due to the coronavirus outbreaks, and that has tempered a rally. Brent was down over $1.32 or 2.34% to 55, and then US WTI settled a whole $1.21 lower or 2.26% lower at $52.36 per barrel. Gold prices slumped as well on Friday, 1%. The dollar continued its upturn, surprisingly overshadowing billions appeal as a hedge to inflation. On the back of that, spot gold was down 1% to $1,827 per ounce. And then you had US gold futures settling down 1.2% to $1,829 per ounce. So if you take all this into consideration, it looks like the SGX Nifty is currently showing us no major positive uptick when the markets open here. In fact, we're looking at a slight downtick at open. It'll be interesting to see if we can defend that over the course of trade today.